Hi guys, welcome back to my YouTube channel. Yeah, welcome back. So today, just like the topic implies, we're talking about identifying rejection or rejected candles, right? And I put emphasis on simplified. So the main reason why it is simplified because before you can actually identify rejection, you also have to have understood the market structure of the instrument you want to trade. That would help you to identify potential levels in which rejections can occur, right? And once you know that, it makes it easier because candlesticks is what we use to interpret the market. So we have to understand what the market is saying, then interpret it to take an action, right? So that's just it basically. So first off, it's always very, very important to identify the structure, the trend of the market. Then you know, okay, either I'm looking for buys or I'm looking for sells, right? And I'll just be going through the charts to show some examples of that. So stick around and yeah, let's go. All right. So first off, as you can see on my chart here, I just try to identify a level, right? And as you can see, first things first, check out the trend. You see it's on a very, very bullish trend. Even if price was ranging for a bit, but it's still bullish. Then we get to the point where we see market change direction from its previous direction. So it was going up before, then it came down and changed direction to the upside. So we mark the point of the previous change in anticipation for where price will come back to that level next, right? Because we're looking for buys, we already know what to look out for. And here, just as it tapped into that zone, we got a very, very good, we'll take it back a bit, we got a very, very good bullish closure, and that's a pin bar, which even signals a very strong reversal pattern, right? And once we see that or identify that, because we always have to wait for that bullish reversal because we're looking for buys, so we have to wait for the buyers to be present to confirm our buyers, right? So we get that, just waiting. Yes, we get that closure, and then next thing we do is to take our buy trade. And mind you, I'm using a backtesting tool to show you how we just played out. This is not real time, but you can also take the trades in real time, right? So we take this trade and it gives us the risk reward is about 1:3 because we use the previous highs, because we also have to align our expectations with market structure, right? So using the previous highs, we see how far I can go and see boom, you went in profits, and your trade management would also help you to manage those trades along the way. But what we're actually focusing on today is just for potential reversals. So you go again, that's an example. Let's try to pick out another example from the market. Okay, so okay, as you can see here, you see the structure. Price came all the way down, then started going up, and as you can see, we started making higher highs and higher lows, higher highs, higher lows, right? So what we would do in that instant is to just mark out the most recent low in which the direction also changed, right? So we mark that out. Also mark that as our recent low. What do? We then wait for price and to boom. When price hit that zone, we had to wait for our bullish confirmation, the buyer's presence, which we got right after, right? And then we take the trade, right? We take the trade and we target our risk to reward. You see, very, very good risk to reward, right? And as you can see, a very good risk to reward, right? So the next thing you do is to let the trade play out. And mind you, just in my other videos, I don't always set TPs because I just always wait to see how price would react at my major levels. And as you can see here, trade moved well in profit, right? Smashing through our previous highs, right? Just aligning with structure. And just at that top too, we can also see a previous level in which direction was also changed, right? And let me use the playback tool a bit, right? Let me play back to right? Because you can see a very, very strong reversal candlestick pattern there, which is an inverse pin bar, right? And you see that trade gave a very, very good, because the entry was really good and the stop loss was really low, right? Gave a very good risk to reward, and we're also market targeting our previous lows, right? So we cleared the market, see, went straight in profits, ranged a bit into the new week, and then what happened next? Forward for about a day, and mind you, everything I'm doing here is on the 4 hours, so you might tend to hold trades longer, but of course you can also test this concept out and confirmation on other time frames, and I would even want you to do that. So you tell me how it goes in the comment sections after your back test, right? So that also went well, right? But then there's also a very, very important thing I would want to notice for every concept. So for every concept, you have to always understand that there's no 100% accuracy. There's no concept you can use that's gonna make you avoid losses. So you always have to know that in fact, right? So based off that, I'm going to look for an instance where the inefficiencies of the concept also comes into play, regardless of your confirmations and all of that, right? And that's one of the very, very fundamental things to always know and have as a trader is the ability to always accept loss, right? You can't predict all of the market moves 100% of the time, every time, right? But so we can see this opportunity here, right? Making a double bottom, previous low, give us a very bullish rejection, right? So we take the trade for a buy. The risk to reward looks really, really good, right? So what happens next? Trade comes in and boom, took us out by eating our SL, and yeah, it's all of those things. But we've done about 4 or 5 examples where the previous ones have been profits, right? And this one just happens to be the loss. So that's just the thing. The losses will be there, but the concept has to just have a probabilistic edge, and your risks to reward and your risk management, right, was also going to be the icing on the cake, right? So always remember that and have that in mind whenever you want to take out any type of trade. So yeah, the efficiency just comes in backtesting, right, and looking out for all of these patterns and the candlestick confirmations, right? So remember, whenever you want to take a trade and you're anticipating reversals, it's always good to identify the structure, to then identify the levels, then be on the lookout for the candlestick confirmation. So if you're looking for buys, you need the buyer's presence to be evident. If you're looking for sells, you also need the seller's presence to be evident, right? So let me know what you guys think about this video, right? Let me know in the comment section, and please also like, engage, share it to more traders, right? And let's have a conversation going. Tell me what you guys think. All right, so yeah, that'll be all for now, and see you in the next video. Bye.